So before we enter one, let's close this out and deconstruct one and say, where does this go? Do you want to leave? I'm going to say yes. Let's go to the balance. Let's go to the balance sheet, the second tab, and I'm going to scroll down. The invoice is going to impact accounts receivable. Let's go into the accounts receivable for 2024, noting the activity in it is going to be standardized in that invoices will increase accounts payable and payments will decrease accounts payable. Payments being payments on the invoice by customers that we're going to receive, payments that could be in the form of cash, credit card, electronic transfer, and so on. So that's all that happens in accounts receivable. Remember that cash, the first thing we think about oftentimes when drilling down on, this is called like the general ledger, which in QuickBooks is the transaction report. When we think about cash, we often think that this general ledger is going to be a mess of all this complicated types of forms. But every other account other than cash, because cash is the lifeblood of the company, is usually much more simple. And the form types over here are only going to have two form types, an invoice and then a payment. So it's going to go up with an invoice, down with a payment. Let's go into an invoice. I'm going to go into one of these invoices, drilling down to the source document. We're basically taking apart the engine. We're starting at the end, the financial statements, drilling down to the source document, the thing that we put together to build it. And once again, we see the customer, the email, the billing address, the terms, and so on. This is what we sold here. So we've got landscaping and pest control. Here's the quantity. And then here is the amount that was charged. So what did this particular item do in terms of journal entries? It increased the revenue account. Well, it increased accounts receivable by the 175, and it increased revenue by 175. Where did the revenue go? How do I know which account was hit by the revenue? Shouldn't the account be in here somewhere? Well, the account's being driven by the item. So that's going to be the sticking point or the kind of confusing component. The items are the things that we're selling. Those are critically important because that's the thing that's going to tell us, one, is this item subject to sales tax? Typically, that's the thing that's going to tell us that. And two, what account is it going to go to on the income statement, right? And that's going to be driven by the item. If I close this back out and we go back, if I go to the income statement, then the income accounts here, this is where the other side is going to go. So if I go into like design income, let's say, then you can see that it is going up with invoices and sales receipts. So all of the income accounts, if we're on a full service accounting system, will go up with the income forms, invoices for an accrual basis, sales receipts if you're at like a cash register or cash basis. But sometimes if you're in a more simplified system like the gig work situation, you're getting paid by YouTube, you might increase revenue with a deposit form, which is not really the natural form that we think about to increase, but that might work in some cases. All right, so that's going to be the idea. Let's go ahead and go back to the first tab. Now, as we track these invoices, remember that we have to try to collect on them. That means if we deal with accounts receivable and invoices, we're going to have to go into the sales center from time to time, most likely then going to the invoices tab and tracking the invoices so that we try to collect on them. We can also search this and deal with our customers individually by going to the customer tab and looking for the invoices in there. So this is if you were dealing with a cash register situation, you wouldn't be in here as often. All right.